Today, I've got a rundown of some hot news from the US that's shaking up the stock market. We're talking about everything from the drama with Elon Musk, a new forecast for the S&P 500, to some great news for big companies like Boeing and General Dynamics. Plus, there are a few stocks that JPMorgan analysts are pointing to as worth watching. If you want to know how this news could affect your portfolio, you'll want to stick around for the whole thing. Joy Up Invest Podcast. Invest better every day. Hello, dear listeners, and welcome to Wall Street Wake Up, the show that wraps up and updates you on what's been happening in the U.S. stock market and markets around the world over the past 24 hours. Let's start with the first story, the never-ending drama between Elon Musk and Apple. Basically, Elon is threatening to sue Apple. The accusation is that Apple is being anti-competitive with its App Store. He says they're giving special treatment to OpenAI's ChatGPT, making it difficult for other AI apps to get visibility. Elon posted on X, formerly Twitter, that Apple's App Store prevents other AI apps from reaching the top spot, which he calls a clear violation of antitrust laws. He's also complaining that his own apps, like X and Grok, the AI chatbot from his company xAI, have never been featured in Apple's must-have apps section. In response, Sam Altman, the CEO of OpenAI, fired back with a bit of a spicy comment. He said, "This is an amazing accusation, considering I've heard Elon has also manipulated X for his own company's benefit." And just like that, this has turned into a public feud between two famous CEOs. My take on this news is that it highlights growing concerns about the App Store's policies. While this might not directly affect Apple's stock price right away, in the long run, if government regulators actually decide to look into this, it could be a risk investors need to watch out for. If Apple is seen as monopolizing the app market, it could lead to new regulations that might impact the company's business model. Now for some good news, everyone. The big bank UBS has loudly raised its target for the S&P 500. They've bumped up their forecast for the end of 2025 from 5,500 points to 6,100 points. And get this, they've set a new target of 6,800 for the end of 2026. Why is UBS so optimistic? They say it's because the economic health and corporate earnings in the U.S. are stronger than expected. But hold on, UBS also warns that the market might be a bit volatile in the short term. They think that early next year, the mix of U.S. growth and inflation is likely to worsen, which could shake up the stock market for a little while. This news shows that analysts remain optimistic about the long-term future of the U.S. stock market. The raised target reflects the confidence of big financial institutions. While there might be some short-term volatility, that's just a normal part of the stock market. This forecast could be a good sign for long-term investors, but for short-term investors who like to momentum trade, you should be a little careful, as the market could become more volatile, just as UBS warned. Moving on to some good news for two big companies, Boeing and General Dynamics. Both have recently been awarded massive contracts from the U.S. Department of Defense. Boeing got a contract for almost $80 million, $79.7 million, for the maintenance of the E-4B aircraft, also known as the Flying Fortress for the U.S. Air Force. This is a very important mission aircraft. General Dynamics is also doing well, with a contract extension worth $322.6 million for supporting submarines in the U.S. Navy. Receiving contracts like these from the U.S. government is considered good news that directly benefits these companies' stocks. This is because it means a stable and secure revenue and cash flow, which are key factors for investors when deciding where to invest. It's a sign that these companies have a strong financial status and a good outlook for the future. Now let's take a look at the individual stock prices related to today's news. I'll be giving you a fresh daily analysis right here. Let's start with Apple. AAPL. In the long run, this stock has always shown a strong upward trend. Apple's leadership in the tech market and its continuous stream of popular products give the company a very strong foundation. However, the stock price has been a bit volatile lately. If you look at the chart, you'll see it surged before pulling back slightly. I believe the future trend is still bullish, but it might go through some sideways or pullback periods to build momentum before climbing again. A key support level I'm watching is around $175 to $180. This is a pretty strong support line. If it falls below this point, we might need to be careful about a more severe correction. But overall, I think Apple's business still has a lot of long-term growth potential.
Next up is Tesla, TSLA. This stock from Elon is another one that's highly volatile. In the long term, Tesla remains a leader in the electric vehicle market, but we've seen competition get much tougher recently, so its growth isn't as explosive as it used to be. The stock chart clearly reflects this. It hit a peak and then had a major correction. Right now, it's in a downtrend or sideways down phase. The price is moving in a narrow range and hasn't been able to break above a key resistance level, which I see at around $350 to $360. If it can climb above that point, there's a chance it could become bullish again. But if it fails, it could continue to trade sideways or fall further. Now for the S&P 500 index. This index represents the 500 largest U.S. companies, and if you look at the chart, you'll see a very clear upward trend. Even with some periodic pullbacks, the overall trend is still strongly bullish. The news we discussed earlier about UBS forecasting the S&P 500 to reach 6,800 points by 2026 reinforces the long-term view that the market still has huge growth potential. A key support level for this index is around 4,500 to 4,700 points. This would be a very interesting entry point if it pulls back to that level. A major correction like this might only happen once or twice a year, so if you're a long-term index investor, you'll need to be patient.
Let's move on to the stocks that just got good news from the U.S. government. First, Boeing. The good news about the contract helped support the stock price a bit. But if we look at the bigger picture, Boeing's stock has had a pretty big drop in the long run, even though it seems to have been building a base at a low point for a while, which could mean it's in a sideways down period or trying to build a foundation to reverse its trend. A key support to watch is around $140, $150. If it doesn't fall below this point, it still has a chance to recover. But if it does, it might be difficult for it to move up. The other company with good contract news is General Dynamics. This stock looks much better than Boeing. If we look at the chart, it's been in a strong, continuous uptrend. The contract news is another positive factor that will help push the price to new highs. I think the long-term trend will remain bullish. A key support to watch is around $250, $260. If the stock price pulls back to this point, it would be an interesting spot for a long-term investment. Let's wrap up with the biopharma group recommended by JPMorgan. We'll start with Eli Lilly and Company, LLY. This stock has gotten a lot of attention lately because of the great feedback on its new product, which caused the stock price to surge. However, it's also had a pretty big correction recently, making the chart look like it's in a short-term reversal to a downtrend. But in the big picture, the stock still has a strong upward trend. A key support I'm watching is around $550, $600. If it drops to this point, there's a chance it could bounce back. The other stocks in this group, AbbVie, Johnson & Johnson, Gilead Sciences, and Regeneron also have strong long-term uptrends. AbbVie, ABBV, the chart shows a clear uptrend and it's making new highs. The trend will likely continue upward. A key support to watch is around $170, $180. Johnson & Johnson, J&J, this is another very stable stock. Its long-term trend is a slow and steady climb. The chart shows the price is in a sideways phase, building momentum.
A key support is around $145–150, which is an interesting spot. Gilead Sciences, GILD, this stock has recently become interesting again. The chart shows the price has just reversed from a downtrend to an uptrend not long ago. The short-term trend might be sideways to build momentum before moving up. A key support is around $80–90. Regeneron, REGN, this is another stock that surged to a peak and then had a pretty big correction. But in the long term, the chart is still in a strong uptrend. A key support to watch is around $500–520, which could be an interesting point if the price drops to it. To sum up, I think each of these stocks has a different trend. Investing in individual stocks requires looking at many factors: the company's fundamentals, industry trends, and most importantly, the stock chart, which gives great insight into the behavior of investors in the market. The most crucial thing is to have a portfolio that matches your risk tolerance.
And that's just my personal take, not investment advice, okay? Always do your homework, double-check your info, and remember, every investment comes with some risk. Before we say goodbye today, don't forget to like, share, and tap that notification bell on Joy Up Invest so you'll never miss our daily dose of juicy market stories from around the world. So what about you? Which stocks are you holding right now? Drop it in the comments. I'd love to hear from you. Catch you in the next episode. Bye!